Every retail trader asks, why did price move? Smart money already knew. The CTKS cheat sheet helps you see what smart money saw before the move happened. Most traders and investors feel the market is rigged against them. They don't have the access to the tools or the knowledge that the professionals have. In this video, we'll teach you how to level up your skills. If you're stuck in the loop of buying tops and selling bottoms, overtrading, or revenge trading, we can help you to break that cycle and get consistently profitable. Let's run the numbers. Welcome to the CTKS method. If you're new, a very warm welcome and welcome back, CTKS family. We are here to help you build your best life financially and emotionally. To think like smart money and trade, invest, and live with intention instead of emotion so you can build your best life. Your best life isn't some distant dream, it's a series of smart, clear decisions made one step at a time. Let's dive in. Listening to mainstream media headlines, we'd never know which way the markets are going to go. But detecting market sentiment is the difference between making money and losing money. The cheat sheet are the 7 rows that can help you to understand which way the market is going and why. Let's have a quick look through row 1 and row 2. Row 1 and row 2 are the best indicators of risk on and risk off behavior inside the markets, particularly focus on the VIX and junk bonds. We also focus into Forex. We also focus on commodities and also on yields. Row 1 and row 2 covers a great deal across the economic system. It allows us to stack probabilities. The predictive power of row 1 and row 2 can be incredible. Row 1 is the VIX, the DXY US dollar currency index, dollar yen, the 10-year, the 2-year, and oil. We were right here in yesterday's video. In yesterday's video, we were right here on the VIX. So the VIX spiked up a couple of days ago, spiked up, withdrew into structural support. If it continued down, we would have seen this blue line, which is Bitcoin, go up. But if the VIX came up and found structural support here, we anticipated the blue line, which is Bitcoin, it's also the stock market, would come down. Now what happened? Of course, it came up. But I did say some other things as well. I said if the DXY starts to break out, we would expect the VIX to break out, we would expect the yields to break out. That is exactly what happened. All markets are intercorrelated and interconnected. When you understand how one market deals with another market, it's an absolute game changer. I'm going to take you through the key charts, so please make sure that you watch until the end. Looking into row 2, which are junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper. Junk bonds came down like a brick, and it's been coming down for quite a while. And of course, Bitcoin has been joining it as well as the major market. The euro dollar has also been coming down, the Aussie dollar down. Notice this, gold is starting to divert. This is a very good sign. Silver is starting to diverge as well. This is exactly what we're looking for. For me, I look at this and this particular chart action and I say Bitcoin is nearing a local bottom and we would anticipate it to bounce up. Now there's 2 kinds of bounces, a short-term bounce and a sustained bounce. I'm talking about a sustained bounce. When the VIX is going up, the major market indexes are coming down. So when we look at row 3, which is the S&P 500, the NASDAQ Composite Index, the Dow, and the Russell, we can see that the S&P 500 across from the 16th to currently around the 23rd has been coming down because the VIX has been coming up. Don't forget, it's always moving in a wave, up and down, up and down. There are always opportunities inside the market if you know how to extract them. We can see also that the NASDAQ comp has been coming down, but look at this, there's some interesting action, very, very early action, but this is something that we want to pay attention to. The Dow has also been coming down and the Russell has been coming down, but look at this, the first signs of life. Oh, nice. This is an institutional view of the market, and it's really important to understand institutions don't trade blindly. They don't use emotion or stories. They understand what they're doing. And when we look at row 4, this is Apple, Microsoft, Tesla, and Nvidia as well as strategy. We can see that Apple has been coming down as the VIX has been coming up. Bitcoin and Apple have been hanging out together. What about Tesla and Bitcoin? Well, they're directionally aligned. What about Microsoft and Bitcoin? Well, they're directionally aligned as well. What about Nvidia and Bitcoin? Directionally aligned. What about strategy and Bitcoin? You got it. But you can notice this flattening out. This is cool. What we're doing here together is stacking probabilities. The probability of a bounce incoming is increasing. Hopping into row 5, which is total crypto market cap, Bitcoin and Ethereum. One thing that we can see, the totality of the crypto market has been coming down. That's been coming down, of course. Bitcoin is coming down, Ethereum is coming down. You'll notice this flattening out here in terms of ETH. ETH has been particularly strong. There are a lot of shorts in ETH, and when they cover, they have to buy. And we're super early in terms of total crypto market cap and also in terms of Bitcoin. There's a couple of charts that I really need to show you. You must look at the markets from a structural perspective. A little bit more on that later on. Knowing where the structure is vitally important. So let's have a look at row 6, which is like looking at the subcomponents of the major crypto indexes. We've got Litecoin, Bitcoin Cash, which are really good parallels into Bitcoin. Binance Coin, basically retail interest. And Ethereum Classic, best pals with ETH. When the cheat sheet is combined with structure, it literally gives you X-ray vision so you can trade by structure and not emotion. Yesterday, I was talking about Binance Coin. It was coming into all of this overhead structural resistance around that 880 mark. It's since met that structural resistance and got a headache and backed off. And if you were focused in looking at the DXY coming up, the US2, the US 10, dollar yen, the euro coming down, the Aussie dollar coming down, you would have seen this particular behavior was representative of what the market was actually doing. Not stories about Jackson Hole, not stories about the Fed, not stories about anything else, just pure market intelligence. For the elite members of the monthly service, you are absolutely awesome. You know where the structure is. You're not trading and investing from a blind perspective. You know where the structure is. You know what happens if the structure is weakened and then underside retested. But you also know what's happening inside the major markets and what's responsible for pushing price down. Looking into row 7, which is ADA, Solana, Dogecoin, and XRP. One of the things that we look at are structural passes and structural failures. Around that 186 mark, we had a structural failure, which meant that price was moving down to the 184 structural support level. It's quite common to get an underside retest before a resumption down. But one of the things we always know, we look at intercorrelation and interconnection. If the DXY is romping up, going on a party, we know that potentially negative downside momentum is likely inside the crypto market. Typically what happens, people who trade and invest in Solana will only look at Solana's chart. They won't even look at Bitcoin's. They won't look at the major market correlations, and they wonder why they get absolutely obliterated. Starting the day with the cheat sheet is an absolute game changer because you'll get into synchronization with the market. If you're new to the CTKS Global family, the cheat sheet, these 7 rows, are available from ctksmethod.org. Simply hit the home page and just scroll down to Mastering Price Action. You can get it free right here. We've been looking recently at the S&P 500. We knew it was weakening, and as soon as it did this cross here, we said we need to look at that 64.30 level for a bounce up. If we don't get that, we're coming down to the 63.40 level because that's where the structure is. In terms of these lines, they're called SCs or Stanfield zones. They're drawn across CTKS levels. So what we can see here, this is the true structure inside the S&P 500, and we're starting to retest it. Now, this is a very good thing. And if you look at the cheat sheet, you know that the dollar, the DXY, is coming into a lot of overhead structural resistance. It's likely to back off from that particular point. The VIX is also coming into overhead structural resistance. We favor a bounce. If the bounce in the S&P 500, of course, gets above that 64.30, wow, that's fantastic. We've probably marked in the local bottom. When we look at the NASDAQ, we can see a fairly similar thing. The NASDAQ did a cut, a CTKS cut, and has gone negative. Now I'll just pop on the SCs across that. We can see that there's a lot of structure here. CTKS structural support ranging from that 2950 mark upwards. So that's been tested. This is a really good area for a turnaround. We may get a persistent bounce here, or it may underside retest and resume downwards. We have to be a little bit flexible. And we know there's going to be incoming volatility because of Jackson Hole, which is basically the bankers' Super Bowl event. I'm personally treating the markets as a local bottom, and I'm leaning in. We always lean in by layers. What could happen to the crypto market if we start to see a turnaround? Well, we can see that Bitcoin is currently $112,560 because the DXY spiked up and the 10-year, the 2-year spiked up, and of course the VIX spiked up. And we also witnessed the cross stacking of probabilities. The euro dollar came down, the Aussie dollar came down, but we've started to see a bit of a basing inside gold and silver, especially a really good bounce inside of silver. Typically when that happens, the odds and probabilities are for Bitcoin to make a local bottom and then move higher. I'm certainly taking that as the sign for my own trading. Now, what does it mean from a structural perspective? We've got overhead structural resistance at that 112,617 mark, and Bitcoin is literally testing it right now. We've got a little bit of underpinning support at that 112,060 level. What we need to do to have a sustainable bounce is to get above 113,836. A lot of people will say, unfortunately, the bull market is over, the bear market is starting if price goes below X dollars. But they'll use recent indicative price and they won't use CTKS structure. CTKS structure shows us where the real momentum, the real liquidity, and the real support and resistance are inside the market. For example, right up at 117,930, that's the next structural resistance level that is inside the market over 113,836. So if gold and silver continue to appreciate in value, if the DXY comes down and the euro starts to go up, this will be signifying risk is coming back into the market. We would expect this 113,836 to be challenged and potentially overcome. Never a dull moment inside the markets. A question for the comments: how often do you use the cheat sheet to get an understanding of market sentiment? When we trade and invest like this, what we're basically doing is understanding how market makers and institutions look at the market. We can trade and invest with clarity, strategy, and certified structure. No guessing, no hoping, no chasing. Most market participants react, we predict. We're completely different, and we already know the structure in advance. So all we need to focus on is intercorrelation and interconnection. That's why the cheat sheet is so vital. Please let me know in the comments, when do you usually check the markets, before the move or after something has happened? before you trade or after trying to figure out what the hell just happened. There's always uncertainty inside financial markets, so that means that we need daily positive affirmations to keep us sane. And it's not just about the markets, it's about life as well. Life is incredibly hard. And if you're going through a life pullback, please know that our love and healing thoughts are with you. And always know, if you're going through a life pullback, you're simply gathering strength for the next life rally. We live, unfortunately, in a really harsh world. It's sometimes really difficult to show kindness, integrity, and gratitude. But showing these things is not for other people. You show them because you want to be happy. The universe does want you to succeed, and opportunities and life always reset daily. What happened yesterday happened. What can we learn from that? All we literally need to do to have a beautiful life is just stay dedicated and committed. If we focus on winning or learning and never blaming, we can pick up the gold, the diamond, the Bitcoin inside that loss and convert it into our gain. And solving our problems with positive excellence is absolutely the way to go. It is not always easy. Nobody is perfect, and nobody can be perfect. We're all human. Literally, the key in life is just to dust yourself off and just get back on the horse until it throws you off again. That could sound a little bit weird, but it's pretty much the way that life works. You're inside a global family that loves and cares about you. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.